Have yourself a merry little spreadsheet. Put scanner spreadsheet. Let's see what we have today. It is organized by annualized return. So there we have annualized return, and I have it from lowest to highest. I have a little rule currently. I'm not saying it won't change, but currently, what I try to do is collect a 20% annualized return on the trade. Now, that doesn't mean I won't close it early, but if I close it early, I'm going to close it early. So that cuts down on the number of days in the trade, which then bolsters the potential return. So we consider all those things when I look at the put options. And today is a put option day. Why is that, Bart? Well, the red day. We have red rum happening right here. The SPY it's trying to tick up a little bit, but red rum overall down 0.09%. So essentially flat, but in the red. So that's going to favor selling puts. Dow is down, NASDAQ down, Russell 2000 down, and that crude oil is up. So we're going to have to take a look at some of our oil sweethearts to see how they're doing today, because my first glance probably an hour ago showed that Valero was down again today. Come on, man. We love Valero. So hopefully it's turned back into the green because the oil and natural gas is up. So let's take a look at the put scanner spreadsheet, some of the parameters. Annualized return 20+%, market cap 1 billion or above. And then also, I think we went all the way to 60 days to expiration just to see if there was anything interesting in these trades. So we look at Qualcomm at the top there. It's showing that it's around 118.55. So let's look at this specifically. Let's take Netflix off for a minute. What is Netflix doing? You said you're taking it off. Let's take a look at Qualcomm just to see what it's doing today. It is down almost 1%. They have earnings on May 3rd, something to consider, right? Something to consider, and being distracted by text in the meantime. I apologize. So it's at 118.28 as we speak, and this particular scanner said, look at the 110 strike 1 month out on May 19th. So if we do that, look at the qual and the com, trade Qualcomm. Come on, internet. You could do it. You could do it. There we go. Sell put. Now, what this is, was it the 19th? Yeah. So the 19th, that would be considered a monthly because it's the third week of May. So it should have the highest amount of activities going on. The 110, was it 110? Yeah. The 110 is paying 206. That's a lot of dollar bills. I don't know. Let's look at the math on this 105. So it's at 14 delta. I mean, the 110 still qualifies for our delta. What's your function of being under 25? It's just under 25. It's got an implied volatility of 40.53%. Probability of profit 77%. Qualcomm, though, if we look year to date, what have they done? They had a pocket through here into the second week of March where they were down to 114. I don't really count this January 5th because those were, we had some big lows that went on at the very beginning of the year. Shot all the way up to 138.46. So I'd probably be comfortable at 110. But let's do the math on that 105 to start. Or what was it? Yeah, the 105. Let's look at the 105 to start. Just as far as the annualized math, it probably isn't going to reach that 20% threshold that we're looking for. 115 divided by 105. Okay, and then we got 31 days out. That's going to be probably eliminate this from being a 20%er. Yeah, 12.8. It's not going to do it on the qual and the com, but the 205 divided by 110 divided by 31 multiplied by the annualized 365, that pushes us up over 21%, nearly 22% return on our money. Okay. But what if we shorten the time frame? We might not be able to get to the 105 or the 110. Let's see if we shorten it to 17 days, what would we look at? Goes down to the $1 wide. That's always provides for the flexibility, doesn't it? So that 110 still could be some nice action here. 147 divided by 110, right? Divided by the number of days, only 17, annualized at the 365. That raises it to 28.6 at the same strike, with an increased probability of profit at 80%, which drives the delta down to what, 22? 21 on the deltas. We got 21 on the deltas here on Qualcomm at 110. And we were looking at it saying recent low is 114, 115. We would come in. What was the earnings date? That might be part of the issue here. Oh, yeah, it's 2 days after earnings. But what if we closed it? What if we got to 70% profit or so and closed it prior to this date? Not bad. Kind of like the Qualcomm play. Let's look at it again. Let's take a look at it now. It's such a sweetheart stock. The $1.44. Let's continue. We can get more. We can get a couple more dollar bills, can't we? See. Let's try for the 146. 146 should not be a problem. 17 days out. What about two contracts? So 292. Can we fill that on Qualcomm? $22,000 in the collaterals. And that filled. Now we can do the exact math based on this scenario. 292 divided by 22,000 equals 1.3% divided by the 17. Carry the 1, multiply by 365. Okay, so we're still at the 28%, which we'll take that. How often, Bart, would you take it? Every day? And drum roll, please, twice on Sunday is what we would take that. Now, you might say, based on Brian's excellent advice, why wouldn't you do a credit spread on that? And in this particular case, Qualcomm is a company that I wouldn't mind owning for a number of reasons. One of which is it pays a fairly decent yield. It is a fairly they're calling it undervalued over at the Yahoo Finance. Let's see what our friends at Seeking Alpha say. Remind me to sell some Philip Morris covered calls today because I keep forgetting. So we got two buys and a hold. All right. Okay. And if we look at what are we looking at? Dividend yield theory. It's currently at 2.68%. And so their 4-year average is 237. So according to dividend yield theory, Qualcomm is currently undervalued because the dividend yield is higher than their historic, or at least their last 4 years average. Let's look at the last 5 years. Does that change at all? Is it statistics we click on? I believe it is. It's statistics, 5-year average 270. So that makes an even more compelling case just by a couple of points there that Qualcomm might be a little bit undervalued as we speak. Back into it at Seeking Alpha just to see what does the dividend history tell us. So they have paid dividends for 19 consecutive years, and they've raised those dividends for 19 consecutive years. So that sounds pretty good. They've currently raised their dividend right before our very eyes. So if we were involved, okay, we would be collecting 80 cents per share in dividends. Now, our current play is to not be involved. We want this to expire at full profit, $292 between now and Cinco de Mayo. Speaking of Cinco de Mayo, get a load of this. So today's Tuesday, and old lady tans a lot. She leaves on Sunday for Mexico again. Again. That's her third time this year. One, two, three. Third time this year. So this time she'll be going with her aunt and her cousin, who her cousin is like her sister, and my sweet wife. Her parents are both deceased, so and she's an only child. So I feel for her. I think I love her. So she's on her way to Mexico again. And I told kid 3, I go, "What are we going to do while she's gone?" And he said, "Eat Chick-fil-A and drink beer." I shouldn't have laughed because that's almost like child abuse, but he'll probably eat Chick-fil-A and I'll drink the beer. So there we have it. All right. So we got Qualcomm on the board, and it was the very first one. Are you going to trade every single thing on this spreadsheet? Probably not. But that one appealed to me. So I thought we'd make a move on it. So we'll come back, continue through the put scanner spreadsheet on this day, on this beautiful day, sunny day here in the farm fields of Valparaiso, Indiana. But it's cold. It's cold again in the 30s. So we'll keep you posted. Subscribe, like, comment, notification bell, share with a friend. Look through all the videos. Click the like button on every single one of them. Make a lovable comment on every single one of them. And I will respond to you, my new friend in stocks, options, and dividends. Be right back.